in 2014, and then quickly we'll move into the demand expectations for this winter, looking at the temperature, precipitation, as well as the wind. Then after that, we'll do the generation and our congestion outlook for the next 3 months as well. And then we'll close up with the procedural changes which PJM will be implementing this winter to address some of the deficiencies that the market did face last winter. And then we'll close up with a summary. So just to quickly go over some of the main points that are important to highlight from last year's winter, we did see some very extreme pricing as a result of really cold weather that we saw particularly on January 6, January 7, as well as January 17, 18. During this time, we did see a record set for PJM's demand at 141 gigawatts, as well as on January 7th, we saw the West Hub price as high as $764. So overall, it was a very extreme winter, very unprecedented pricing as a result of the cold conditions. Also, the very volatile gas prices that we saw all across the RTO. And then in addition to that, we also did see some impacts from the direct cold coming in on some of our generation equipment, which led to a lot of our generation stack going on outage due to a lack of fuel, and also just some of the equipment failing due to the cold. So I'm just highlighting just a few of some of the important things from last winter. So to keep in mind as we go throughout this presentation, we will be referring a lot to some of these very significant events. Then over to Pedro for our demand outlook.
Thank you, Diana, and good afternoon to all the participants. Let's start our weather and demand discussion by answering one of the most important, if not the most important question out there about this coming winter. Will there be another polar vortex? Well, the short answer is no. Last winter was, just to have last winter, give a little bit of background, put it in context, was the 6th coldest in history over the Great Lakes and the Midwest. So not only is unlikely that we will have back-to-back polar vortex-driven winters, but the long-range weather drivers this time around just simply do not support prolonged extreme cold events. Now, this does not mean that it won't be cold. It's winter after all, and our forecast, as you can see on the right side of the screen, even calls for a below-average winter temperature-wise for PJM, although anomalies will range from 1 to 3 degrees below normal. Now, when you compare these to last winter, as you can see on the left side of your screen, you'll clearly see that we're not even close to being as cold, especially over the Great Lakes. Now, what is going to be driving this winter? Well, there are two main drivers. One, and the most important one, is a weak El Nino that is currently developing, and it's supported by current observations and the most climate forecast models. And then we have the Eurasian or Siberian snowpack, and both of these have correlated well to colder than average weather in the East Coast especially. Now, of the two, El Nino should have the largest influence, in good part because it is more broadly understood and is widely considered to be a good winter weather predictor. Now, we specifically looked at the winters of 1960, 61, and 1979 and 80 as the best proxies for how we expect this coming winter to shape up. Now, the reason we picked these years is because they portrayed a very similar ENSO evolution in the months leading up to each of those winters, and even during the winter months themselves when a weak El Nino ultimately developed. Now, what do these two winters tell us? Well, despite the difference that you're going to see in these two maps in magnitude and coverage of the temperature anomalies between the two, the overall pattern is very similar, and it shows cold anomalies across the eastern U.S. and even across parts of the Great Lakes. So this is why our forecast calls for a below normal winter for the East Coast, with the Great Lakes being slightly less cold than the folks out east. So let's take a look at the monthly temperatures, monthly temperature anomalies for this winter. And this slide specifically shows how the winter temperature anomalies will evolve from beginning to end of the season. Our monthly progression shows a seasonal to milder start in December, with colder than normal conditions by the end of the winter, especially during the month of February. That's when the coldest anomalies are expected. Now, from a climatological standpoint, we usually have the coldest weather in mid-January, and therefore it's not a big surprise that peak demand for the winter season usually occurs in January as well. Now, this winter, we expect to buck that trend, and we expect the coldest weather and the peak in demand to occur during the first half of February. Now, this is not unprecedented. In 2007, our peak demand in all PJM, all zones, took place on February the 5th. Now, 8 years later, we expect to land a February peak as well. Now, looking at precipitation, we're going to kick off the season on a seasonal to slightly drier than average note in most areas, but it will become more active, wetter and snowier by the end of the season, especially along the East Coast. The Great Lakes will remain rather dry and with less storm activity than usual for winter standards. Now, lighting load should be an important contributor to demand during the on-peak or daytime hours throughout the month of February along the East Coast. So we're going to have the cold and we're going to have the storms. Both heating load and lighting load should contribute greatly to demand during that month. So in summary, February is not only going to be the coldest, especially the start of the month, but also the stormiest. Now, finally, let's briefly talk about wind. Winter is the most active part of the year, with most of the wind activity driven by large-scale winter storm systems. Now, as you can see on the charts, red bars, the capacity factors have exceeded 40% over the last 3 years, the last 3 winters, with 2012-13 about 50% even. Now, this winter, however, with the expected decrease in storm activity, especially across the Ohio Valley and western Pennsylvania, we should see a reduction in the capacity factor number to only about 41%. So a few percentage points less than the last 3 years. Now, that is below the capacity factor of each of the last 3 years. However, the blue line tells us that the total wind generation for the coming winter should exceed that of each of the last 3 winters totals, simply because of the increase in installed capacity of the last year, which is close to 1 gigawatt. So the bottom line here is you have less wind on average, but we will supersede this negative impact on generation by virtue of having more wind turbines out there. Well, that's it for the weather and its impacts on demand and wind. Now let's turn our attention back to Diana for a discussion on generation.
Thanks, Pedro. All right, so on to the generation outlook for this year. So first, we did look at the planned outages that are currently published by PJM on EDOT, and what we're showing right now is just the amount of generation that is expected to be out over the next 3 months. So we start off looking at December. You can see that we are about 15 gigawatts to start off the month there on outage, and then as we go to the end of the year, these do drop down to pretty similar levels as last year, and then they start to come back up again at the end of January into February. So overall, most of these outages right now are actually located in the eastern regions of PJM. So if you look on the graph on the right side, you can see that region-wise, most of these outages right now are in eastern PJM, and as we've seen over the past few days, whenever there is undercommitment particularly in the eastern zones, you can see that there's a very big reaction to prices. And then just zoning in on some of the major outages that we are expecting this winter. So most of these outages are, again, in February. So we have 3 major nuclear outages planned. First is La Salle, which is located right in ComEd, serves a big portion of the load there. So without this nuclear plant in February, we'll likely see ComEd being undercommitted, which may drive some bullish impacts to the zone. Additionally, the Culver Cliffs also goes out mid-February. And without Culver Cliffs, there will be a lack of generation again in TEPCO, BGE, and even Dominion. And these will likely result in strong west to east flows during February, particularly with the cold that Pedro was just talking about. If it's as cold as we're expecting in February, then we'll likely see some strong pricing in February. And then last is the Palisades nuke. This is actually located in Michigan. It's not part of PJM, but when we don't have this nuke in Michigan, we do start to see PJM sending a lot of exports out to MEX, and as a result, this also impacts some of the flow patterns there, resulting in a lot of congestion, impacting mostly the AD hub as well as NI hub. So as mentioned earlier, last year we didn't just have problems as a result of planned outages. We also did see a lot of price strength as a result of forced outages, mostly due to the cold. So what I'm showing here is the outline of the generation outages last year from January 6th to January 8th, which is when we saw the strongest load in PJM. In green are really outages that are unrelated to the cold. The ones we want to focus on are the orange shading as well as the gray shading, which is showing the outages as a result of fuel outages, and the orange shading is showing us the cold weather outages. So these are units that went out because maybe if there were wind turbines, the blades froze, or we just could not switch between gas and oil because of some failures in the equipment. And then the gray, again, like I was saying, these are just simply because these units were unable to procure any fuel, so frozen stockpiles, coal piles, and also just inability to acquire some gas during this cold period. So these outages were as high as 35,000 megawatts at around 7 p.m. on January 7th. And then on the right, you're seeing the distribution according to the fuel type of these outages. So overall, there were quite a lot of cold weather-related outages, and this year PJM has planned to do a cold weather exercise in which they will be testing out the performance of most of these generators that haven't been running over the past 8 weeks or so to see if they will be able to have a correct startup. In addition, they'll also just assess some of the operational abilities of most of the generation, and also ascertain that fuel switching units will be able to do it should we have some of these really cold days. And then just more long-term changes in our generation stack. We do have quite a few units that are scheduled to be retiring by the end of the year. So first, I just want to highlight a few here. So we have Walter Bedford, which is a coal plant located in DOK. About 800 megawatts of this generation will be retired by the end of the year. So overall, expect some undercommitments in DOK. Also, same for Dominion. We do have Yorktown as well as Chesapeake. These add up to about 900 megawatts. And again, these will result in some undercommitment in Dominion, particularly on those very extreme weather days where we need to rely on even the most expensive of units. So while we recognize that most of these units have a pretty low capacity factor, they're not running on a daily basis, we do think that they will impact some of the pricing when we get to some of those very extreme days. So we also do have a new generation that is currently expected to come online by the end of the year. Particularly this year we have Warren County, which is a 1,300 megawatt plant located in Dominion. This is a gas-fired combined cycle, which is currently testing according to PJM. So we should have this generation online by the end of December. Similarly, we have the West Deptford, which is located in PSEG, about 600 megawatts of combined cycle generation as well. So both these will definitely be a big provider of power to some of the main load centers that we have here. So Dominion, PEPCO, BGE, and also PSEG and Jersey up in the northern parts of PJM. And then finally, we do have a new plant which is scheduled for the first quarter of 2015, which is in ComEd. This is about 600 megawatts again of combined cycle generation in, which is, and again, it's only expected to be online next year, but we did think to put it on here because if it does start to test over the next few months, we may see it impact some of the flows in ComEd as well. And then finally, in the generation section, we wanted to touch on some of the main, the interesting phenomena that we did see during last winter. So first, here we're showing on the left side, we have a representation of the number of hours each of the main fuels in PJM was actually on the margin. So you can see that the natural gas and coal were definitely the big ones. They are always on the margin, and there was definitely some switching seen there between 2012, 2013, the winter, and also last winter. So overall, those were the main ones. But the change that we really wanted to focus on today is to do with the oil. So we did see an increase of both the light oil, which is the number 2 sulfur oil, and also the heavy oil there. You can see that there was a pretty dramatic increase there, and this was a result of the very high gas pricing that we saw last year, with oil remaining pretty cheap, around $21 flat. This year we actually are seeing some cheaper oil pricing, so about $17 for the year, and we may be expecting to see even more reliance on oil, especially if we get to those extreme cold weather days where the gas prices really soar. And then onto the transmission and congestion analysis. First, we'll look at the top constraints that we saw last winter. We've divided this up in terms of Western PJM and Eastern PJM. So first, looking at Western PJM, there were a lot of constraints that we saw, mostly wind-related, and I just wanted to focus on the Monticello East Cinema constraint, which we saw for about 475 hours last year. And overall, this was a really big constraint, predominantly giving downside to the NI-hub. And this year, we really haven't seen much of this constraint, mostly because the line itself has been on outage with some upgrades that have been happening in the area. So it does come back on the 10th of January, after which we will be in a better place to assess the upgrades that have happened there to see if it will still be a major constraint in PJM. And then over in Eastern PJM, last year was a very big year for the AP South interface as well as the Bedla interface. So typical flows in PJM are going west to east, and the AP South interface is a pretty major interface serving Dominion, PEPCO, as well as BGE. So over the past 4 or 5 years, work has been ongoing at the Maelstrom to Dobbs line, and this line was out again last year during the winter time. This year, this line is actually in service. They completed the work there pretty early, so overall we will not be expecting to see as much of the AP South interface congestion this year. And then also in Eastern PJM, I wanted to touch on the Reddington to Roseland constraints, which was also a pretty major constraint last year, with about 278 hours of congestion seen. You can see last year we did have an outage in most of February, which contributed to most of the congestion that we saw at Reddington Roseland. There was work at Branchburg to Ramapo for most of the month, and this work was actually to add another substation at the Hopatcong station. So this will be bringing in power straight from Branchburg into PSAG via the Hopatcong to Roseland line. So this line has been in service since April of last year and April this year actually. So overall now we have a lot more generation coming into PSAG, which has reduced the number of hours we've seen congestion in PSAG, and certainly we have not seen much congestion at Reddington to Roseland. So this is not a constraint that we'll be expecting for this year. And then we wanted to put a few of the things that we have been discussing with the generation and the transmission changes year over year into a big picture context. So looking here at the flows over in BGE and TAP coming from the AP South, you can see that they're going in the typical direction west to east. And this year we do have the Mount Sumter Dobbs line. So with that line in service, we definitely have a greater capability of sending flows to those major load centers. And then in addition to that, we do have the Warren County plant, which is scheduled to be in service by the end of the year. And with this, this will also reduce the amount of west to east flows that we may expect. And the expected impact from this is that we will start to see a tighter West Hub AD spread just with fewer hours of congestion on the AP South. So the table right at the top is showing some of the it's showing the spreads from last year between the West Hub and the AD in both the day-ahead and the real time. In January, you can see that we went as high as $50 in both markets for some of the spreads, and this was really high. And definitely this year, Genscape is expecting that this will be tighter than what we saw as a result of some of those additional equipment in the system. And then finally looking at ComEd. We do have some congestion patterns that we've already seen recently, particularly at Cherry Valley. Transformer, this will be ongoing throughout the winter and will be reduced once the 1% transformer comes back into service. And at the same time, we have some additional congestion that we may expect there. When the LaSalle nuke goes out of service, there may also be some undercommitment there on that and driving really strong flows on the low KV network on the 7713 to Mason or 7713 to Crescent lines. And then also with the Palisades nuke going on outage, like I've already said, we'll see Cook, which is the PJM unit, sending more flows up to Michigan. And as a result of that, we'll likely see some congestion around Benton Harbor to Palisades or the parallel Cook to Palisades line. And then similarly, right at the Zion to Pleasant Prairie, we'll also have an outage there for most of January. And the result there will be congestion on the Pleasant Prairie to Zion with some of those flows, input flows coming into ComEd. So we still see a lot of congestion, bullish congestion in ComEd overall, which will likely be reduced as we go into February and start to see more of a bearish impact coming from the Benton Harbor Palisades. So that's it. Passing over to Roger.
Thanks, Diana. So I'd just like to spend some time to talk about some of the operational procedure changes that PJM are proposing around cold weather alerts. Really in response to some of the volatility and some of the uncertainty that we saw last year with the polar vortex and some of those very volatile days we saw in January. So just to start out, let's just revisit some of those cold weather alerts last winter. So the graphic you're seeing in front of you charts PJM peak demand, that red line across the top, against instances of where a cold weather alert has been called for the entire RTO, the corresponding red bar, mid-A in green, west in orange, or ComEd in blue, and we've actually put along the bottom the corresponding high temperatures, the daily high temperatures for each of the major cities in those zones. So for Pittsburgh, we matched the west. For mid-A, we looked at Philadelphia, and for ComEd, we looked at Chicago. For the purpose of this, we took out South and Richmond as the major load center, as there weren't any cold weather alerts called for South in itself, and the temperature swing for Dominion during last winter was so much that we didn't really see any meaningful data from it. So you can see a couple of things from this graphic. The RTO cold weather alerts predominantly occur when you're seeing colder temperatures in both Pittsburgh and ComEd. The kind of sweet spot for a lot of these cold weather alerts in January in particular, those 6 in the middle there from around the 21st onwards, really is when we're looking at peak load in the 140 gig range, and we can see that they called around 30 events for the previous winter, and cold weather alerts are an instrument that PJM can actually call in instances of gas supply concerns, or where the forecast or actual temperatures are likely to be 10 degrees or below, or the equivalent temperature with the wind chill impact. So some of the changes that PJM are looking to implement for this winter and in the coming months, there's 4 main changes that we've seen. That's in addition to some of the winter readiness preparation that Diana talked about. So the 4 main solutions they've come up with really can be divided into day ahead and real time. So the first 3 of these are cold weather specific. The long lead unit commitment, a day ahead scheduling reserve, and a change to the net interchange cap, the change of imports and exports. And then they've also implemented an intraday cost scheduling solution whereby they can control for some volatility in the real time. So just to go through a couple of those. Firstly, the long lead unit commitment. This is really aimed at units that, by virtue of their offer curve, their startup times, they may be excluded from either the first commitment, the day ahead, or the reliability second commitment. So, for example, if a unit's needed by 6 a.m. but has a 14-hour startup time, it's not going to clear the day ahead. This new solution effectively enables PJM to call on these units 48 hours ahead. So this is when they have actually called the cold weather alert for a given day. They can approach these units, ask them to offer into the market, and they'll be picked up. It also enables units with any kind of gas restriction. So they have a take gas restriction where they, if they need to be running for Monday, they need to be taking gas on the Friday in order to run through the Monday. This allows PJM to dispatch them into the market. The second cold weather alert specific solution that they've come up with is increased day ahead scheduling reserves, or DASR. So they're looking to implement this by February. And the aim is to really meet both the load and the forecast error in the day ahead, and really address a lot of day ahead, a lot of next day real-time volatility in the day ahead market, as opposed to just committing more in the ancillary or the reserve second commitment run. So we're really anticipating the effect of this is you're going to see more mid-merit or more expensive generation priced into the day ahead. That gives them more notice to purchase gas, greater lead time to come online, and you're going to see potentially a higher day ahead clear as this generation is committed into the day ahead versus just additional generation in the reliability or second commitment run. So just looking at some of that day ahead and real-time volatility from last year, so we can see there was a really big swing in the DART spread, noted in orange here, particularly around that 7th of January period when we did see those $600-700 prices. So this chart you're seeing in front of you is the 24-hour day-ahead real-time West Hub L&Ps, and charted against that the dart spread for the corresponding day. So the anticipation is that with a couple of these new solutions, you're going to see a lot of this volatility really dealt with in the day ahead rather than the real time. You're going to see additional generation incentivized in to the day ahead. And with that in mind, it's likely to favor a positive dart spread as you're dispatching a lot of these more expensive units in the day ahead versus the real time when they're called upon to solve for this volatility. So these first two solutions are really aimed at solving a lot of the volatility and a lot of the risk in the day ahead versus the real time. There's a third cold weather alert specific implementation that PJM are going to be doing, and that's an actual cap on the net interchange. So again, this applies when a cold weather alert has been called. They're looking to implement this within January. And really what they're going to be doing is when they've called a cold weather alert and when they've decided that there's sufficient generation and imports, firm imports to serve the actual given load, they're going to look to cap the amount of interchange imports coming into PJM in order to prevent any kind of big price swings. And it's really protecting a lot of those firm resources like peaking units or demand response that are being priced in to solve for some of that volatility. So the example that PJM gave, and I actually borrowed this slide directly from PJM's presentation, is you see the orange line here is the net interchange in PJM. Match that against the green line, which shows the actual RTO total L&P. So you can see in hour ending 14, you see a spike to $465. You see demand response dispatched in. You also see the net interchange, that orange line, move up significantly as imports flow into PJM. The next hour falls to $52, and that really disincentivizes a lot of that peaking or demand response that's been priced in order to solve for that volatility. So it's really to manage a lot of the volatility in a more effective manner. And then lastly, the fourth big implementation they're looking to do is intraday cost scheduling. Now this is a pretty significant change to the way that generation is offered into PJM. This is specific to the real-time market, and this deals with only generation that has not been committed either in the first commitment for the day ahead or for the second commitment for the reliability. And it enables generators to actually schedule up to 4 hours ahead and offer in their generation if they have not already been picked up in the market. And it's really to manage any price volatility during those extreme conditions. It's any kind of revisions on demand expectations through the day. For example, some of the lighting load we've seen recently really driving up the peaks. This is another tool for PJM to manage some of that volatility. And so generators may actually offer in up to 4 hours ahead. PJM are going to run them for their min and max runtime. So they'll be dispatched based on real-time L&P, but they'll be made whole to how they're picked up by PJM. And so this is a this is a bit of a mixed impact on real-time L&P overall. On one hand, it allows PJM to manage some of the strong volatility they could see coming up to, say, an evening peak, for example. On the other hand, they're pricing up real-time in order to actually incentivize some of these units and to actually clear these units for this intraday cost scheduling. You're going to see higher real-time price, but I'd say net real-time downside just with this additional generation are able to come in and solve volatility. In reality, this is probably something that PJM is only going to be calling upon during extreme weather events. So while it is available year-round, we don't anticipate seeing this on a regular basis, especially given some of the day-ahead implementations that PJM are doing, really to avoid this kind of last resort in terms of scheduling additional generation in. So just to summarize, we're going to just go over a couple of the points that myself and my colleagues talked about. I just really summarize these up in the slide. So any, if you were unclear on some of our guidance in some of the following slides, this just really summarizes some of our main outlook points. So firstly, weather that Pedro talked about. From a temperature perspective, December is looking fairly mild and looking for a bearish outlook on December on a demand basis. January looks more mixed as it becomes more seasonal. February is looking potentially colder. Therefore, we're bullish on February in terms of demand. In terms of precipitation, looking for less snowfall, less precip until February again. So February seems to be our big month from a demand perspective. Looking at generation outages, so again, February is looking fairly bullish just on some of those nuclear outages that Diana touched upon. That combined with a bullish demand outlook could signal some volatility. And from a forced outage perspective, our take is that we're actually looking for less forced outages, or if not less forced outages, then PJM are going to be better prepared to deal with some of these forced outages. So we're bearish on that side. Additional generation coming in is going to be a net bearish signal for LMP. In terms of congestion, again, these additional generators and lack of really significant transmission work, we're not really seeing any big pieces of work on some of the major interfaces. That we're bearish on congestion. And for the West Hub AD spread, less of these major interfaces going on outage and less overall work on the higher voltage transmission grid. Looking for less west to east constraints. And then in terms of procedural changes, this does remain to be seen as they're implemented by PJM, but the expectation is we're bullish on day-ahead LMPs, with PJM looking to price in a lot of volatility before it happens. In terms of the real-time, we're looking for PJM to better manage demand and price volatility, and in that sense, we're bearish on the real-time. And with that, I'm going to hand over to my colleague Diana.
All right, so that actually ends our webinar, but we have a few questions before you all leave. The first question is, will the two new power plants, Warren and West Deptford, be monitored by Genscape, or will be monitored on Genscape Power IT? So far we have actually Warren County on the queue, and right now there's definitely a plan in place to also get the West Deptford plant monitored, but as with most of the units over in PSEG, they're usually IR, where we're using the infrared technology, and this may take longer than it will take for us to monitor Warren. So you may expect Warren in the next month or two. Do you have any questions?
So we're going to review some of the questions that some of the attendees have put out, and we'll be back with you shortly.
All right, thanks so much for joining us. We'll follow up with any additional questions that you may have. Please feel free to email or call either Rodri or myself at any time. Our contact information will be provided with the slides. Thanks so much, and we'll talk to you soon.
Thank you.
Thank you.